Ladies and gentlemen, good day and welcome to the Man Industries India Limited Q1 FY26 conference call hosted by Ventura Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. Before we begin, I'd like to point out that this conference call may contain forward-looking statements about the company, which are based on the belief, opinions, and expectations of the company as on date of this call. These statements do not guarantee the future performance of the company, and it may involve risks and uncertainties that are difficult to predict. I would now like to hand the conference over to Tanmay from Ventura Securities. Thank you and over to you, Tanmay.
Thank you, Karthik. Good day, everyone. On behalf of Ventura Securities, I'm pleased to welcome you all to the Man Industries India Limited Q1 FY26 earnings conference call. Today we have with us the management, Dr. Ramesh Chandra Mansukhani, Chairman of the company, Mr. Nikhil Mansukhani, Managing Director, Mr. Sandeep Kumar, Chief Financial Officer, Mr. Rahul Rawat, Company Secretary, Mr. Vijay Gyanchandani, DGM Investor Relations. Now I would like to hand over the call to Dr. Ramesh Chandra for his opening remarks. Thank you and over to you, sir.
Yeah, good afternoon, everyone. This is Mr. Nikhil Mansukhani here. So, as we've delivered a strong profitability and margin expansion driven by a favorable product and geographic mix, the YOY revenue declined 0.6%, largely due to the deferment of export shipment worth around 150 crores and due to geopolitical disruptions. As of 30th June 2025, our order book stands at around 3,200 crores with an additional 15,000 crore in our bid pipeline. Currently, we are L1 in few high-value projects which are at advanced stage, so we expect these to convert and hopefully to announce these orders very soon. Our internal production schedule shows promising momentum in H2 with both LSAW mills fully booked. This backlog coupled with enhanced capacity utilization is expected to deliver meaningful operational leverage. Exports account for approximately 80% of the order book, a strong testament to our global positioning in the key markets. In our LSAW pipe business, demand is surging for both pipeline infrastructure and oil and gas transmission projects. Our technical strength across LSAW and coated pipe position us to fully capitalize on this growth. Our strategic expansions initiatives in Saudi Arabia and Jammu are progressing well and they are on track, with operation expected to commence by Q3 and Q4 FY26. We are establishing a 300,000 ton per annum capacity facility in Dammam, Saudi Arabia, with a capex of around 630 crores. This is scheduled to be completed within FY26. This facility will help us offset import duties and bring production closer to the core demand centers in Saudi Arabia. And an approximate estimated incremental turnover would be approximately 3,000 crores. Also, we are in discussion with the Saudi government for certain orders, and hopefully before the plant comes online, we should have something in hand. On the other hand, Jammu, the stainless steel seamless plant, the construction is going well, and that plant should also be up and running by FY26. Out of the 1,200 crore capex earmark, the total capex earmark for these two projects is approximately 1,200 crores. With that, I now hand over to our CFO, Mr. Sandeep Kumar, to review the financials. Over to you, Sandeep.
Thank you, Mr. Nikhil. Good evening, everyone. Let me take you through the financial highlights. I am pleased to begin by highlighting the financial resilience and strategic progress we have achieved this quarter in a challenging environment marked by the deferred exports and moderation in raw material costs. Our financial performance stands testimony to disciplined execution and operation agility. Let me briefly walk you through the key performance highlights. Total consolidated income grew modestly to 774 crore. Our EBITDA surged by 39% YOY to 80.6 crore, reflecting substantial margin expansion of 290 basis points to 10.86% from 7.73% in the same period last year. Notably, our PAT also increased by 45% YOY to 27.6 crore, with net margin improving by 110 basis points to 3.6% from 2.59%. These results are merely numbers. These are indicators of our strengthened capacity utilization, optimization cost structure, and strategic product and geographical mix. With this, we would like now open the floor for question and answer. Thank you.
Thank you, sir. Ladies and gentlemen, we will begin the question and answer session. If you have a question, please press star and 1 on a telephone keypad. Ladies and gentlemen, if you have a question, please press star and 1 on a telephone keypad. We'll wait for a moment while the question queue assembles. We have the first question from Darshil Pandya from Finterest Cap.
Hi, am I audible, sir?
Yes.
Yeah, hi. Sir, I wanted to understand, since, our business was affected last quarter, how are they for this quarter? Are we seeing some normalizing trend?
Yeah. So, Darshil, the Q1, Q2, the backlog is still there. So, quarter is slightly better or similar to the current one, approximate. And Q3, Q4 are very, very robust because of all the deliveries and multiple shipment and new orders. The Q3, Q4 are much going to be higher than the Q1, Q2.
Okay, got it. And sir, what is the
approximately
you're seeing?
Or and above what was the growth last year.
Sir, I can't hear you.
I think the entire revenue would be approximately 20% higher than what was there last year.
Correct. Got your point. And sir, also to understand, what is the other income that we are getting, and since we are including it in the EBITDA margins, wanted your thought. And
other income is part of the operation. It is incentive, forex, other things, which is forming part of the operations only. This is not from the leasing or some interest income or something. This is the operational other income. That's why we are adding that to our operation from operations only for all our calculations.
Understood. Final question would be on the real estate side, sir. What is the number that we're expecting this year? Because last quarter, I remember around 360 odd crores we had accrued. So what are we expecting for this financial year?
Real estate for this financial year, the launch is going to be in quarter 2, quarter 3. So once the launch is done, we will be able to give you a more clear picture. But I think approximately 70 to 80 crores should be there. Again, that would come in Q3, Q4 because the launch of the project is, I think, in Q3, start of Q3.
Got it, sir. All right. Thank you. I'll get back in the queue. Thank you so much for taking the questions.
Thank you. The next question comes from Shubham Purohit from SBI Securities. I repeat, the next question comes from Shubham Purohit from SBI Securities.
Hello.
Hello.
Am I audible? Yeah, sir, a few questions from my end. Could you please provide the product-wise sales volume for the quarter?
We operate only one segment, which is the steel pipe, and total revenue is coming from the steel pipe segment only.
So, in that, the total volumes in say, let's say, LSAW, HSAW, ERW?
We don't disclose that number because that number is coming from the total business together. So as a policy, we are disclosing the total revenue number only, which is
Okay, sir. Okay, sir.
crores.
So my next question would be, could you elaborate on the Jammu plant's GST arrangement and the calculation for the rebates?
Yeah. So Jammu, we are in the NCSS scheme, which is National Center Scheme. Basically, it is 18% gross GST on every sale that you do in the country. And that is, you can take the benefit over 10 years. So suppose you have an investment of machineries of 100 crores, you get a grant of around 300 crores, which can be utilized over 10 years. So you would get 30 crores in the form of entire 18% GST, number one. Number two, you would get a 6% interest subsidy if you borrowed from bank. These are the two main subsidiaries.
Incentives.
So yeah, sir, this 18% GST would be on the sales, right?
Yeah.
Yes.
And what would be your investments in the plant and machinery?
Around 430 crores.
Okay, sir. Okay, sir, that would be all from my end.
Thank you.
Thank you. We have the next question coming from the line of Yash Sinha from MIPL Family Office.
Hi, am I audible?
Yeah, I can hear you, yes.
Yeah, I just wanted some clarity on since the Jammu and Saudi plants are coming online in FY26, that is the normal year of FY20, what kind of utilization levels are we targeting?
Yes, we can't hear you.
Hi, am I audible?
Oh, yes, there's a lot of noise in the background.
Okay, I'll join back in the queue. Sorry.
This call is no longer being recorded.
Hello? Hello?
Mr. Yash?
I think it's got disconnected probably.
You can take the next.
Yes, sir. The next question comes from Mr. Bharat Kumar from Choice Institutional Equities.
Hello.
Hello.
Yeah, Mr. Bharat.
Yes, sir. So the geopolitical tension you have mentioned in the call. So what was that? Can you tell? Hello.
So Bharat, you are not clearly audible. Can you please repeat?
Can you repeat your question?
Hello,
please?
can you hear me now? Hello.
Yeah, Mr. Bharat.
Hello. Yeah. So what is the geopolitical tension you mentioned in the call on remarks?
Mr. Bharat, your voice is not audible. Can you speak clearly, please?
Hello. Can you hear me now? Hello.
No, your voice is cracking still. We cannot hear you.
Join that again.
Thank you, sir. The next question comes from Riken Gopani from Capri Global.
Hi, sir. Thank you so much for the opportunity. Sir, firstly, if you could help understand for the first quarter, what would have been the volume performance compared to the same quarter last year?
We can share those details independently.
Okay. And what we are saying is, of course, the third and fourth quarter will be relatively stronger. So you still see, of course, there was some slippage because of the disruption in Q1. Q2, are there any specific factors that will still sort of drive broadly steady numbers YOY?
So the reason is basically a lot of backlog gets created once the first quarter. So second quarter is pretty much pushing through what the first quarter has been done. And Q3, Q4, a lot of the new orders, the production is going on in Q2 and the shipment is in Q3 and Q4. So pretty much all the mills are busy in Q3, Q4. So in fact Q2, but the shipment will be in Q3, Q4. So we are seeing quite a sharp uptrend on Q3, Q4. Q1, Q2 will be similar, though whatever is missed in Q1 is going to be coming ahead in Q2.
Okay. And secondly, if you can help understand in terms of margins, while we did say that even in Q1 there was some impact because of the export shipments getting delayed, what has helped the overall gross margins and the operating margins in this quarter?
Basically, we are working towards getting orders, whether it be local or export, value-added products, the product coated, and then CWC, some offshore pipeline work which we are doing. So overall, this year, the margins will be probably north of the numbers which are already come this quarter. So like we even said previously, that we are working on the higher margins, and we are working on also on the projects which are higher margins. And currently, we are doing a little bit of less of water orders also locally. So that is also impact, not really bringing down our EBITDA. So that's why EBITDA margins are in fact highest, I think more than 11% at a standalone, I think approximately 10.8 on a consolidated.
Okay, so that's actually supported by the mix change within the domestic business also, not just the higher margin business, because that is still to be executed in Q3 and Q4. So you will see further improvement in operating performance, is it?
I think actually all the orders, because 80% is export ticket. So all the orders, whatever is going out, are all good margin orders. So like we said, domestic as well as export, all the orders which are taken at a better margin. And we expect this to continue.
Got it. And lastly, if you could throw some more light on the Saudi commissioning in terms of, would you start seeing this generating business in this year in any way, or it would only be from next year that you would see any meaningful contribution?
It would be next year.
Got it. Okay. Thank you.
Thank you.
Thank you. The next question comes from Pritesh Chadha from Lucky Investments.
Yeah, have you started executing the South Asian order which you had announced some quarters back?
Yes, we have started execution in this quarter. And so yeah, that would be coming up in the coming quarters.
Is it a part of this?
We have already started executing this order in this quarter, and we are expecting this order to complete by this year end. So current quarter.
Was this Sorry, go ahead.
Yes, please, go ahead.
No, so the question was this the first quarter of that execution?
Yes, this is the first quarter we have started executing this Southeast order.
Okay. So basically what you're calling out also to the previous participant is that this year largely we will see better margin orders getting executed throughout the year. So the operating profit growth will be much faster than the top line growth. Is it correct?
Yeah, that's correct.
And on the top line front itself, we are calling out 15 to 20% top line growth, correct?
Yeah, correct. That's correct.
Okay. Now on the Jammu plant, in terms of the plant status, so has it arrived for you guys, or what is the exact plant status of Jammu?
The majority of the machines have been delivered. The construction of PEB is already started. We should be in Q4 ready for hot trials, and for some approvals as well, we will apply them. So 3 months there because of the problem of the war, all the manpower and everyone had left practically from that state, and then it was quite a big task for us to get them back. But now they are back to normalcy, and that is why the slight amount of delay. But all the machines and everything, all the major equipment are already delivered on site.
All the equipments are already delivered on site?
Yeah, all the major equipments are delivered on site.
So the extrusion press, is it delivered or that is yet to be delivered?
That is getting shipped out on first week of September. It's under trial right now in Europe, and our people are already there, and it should get shipped out around September, some date in September.
Okay. Yeah. Thank you very much, sir.
Thank you.
Thank you. The next question comes from Pratishka Singhvi, an individual investor. Please go ahead.
Hello, am I on?
Hello?
Hello.
Yeah.
Yes. Hello.
Yeah, please go on.
I wanted to ask that, given the recent US tariff imposition on Indian exporters, there is likelihood of market shift from US to non-US destinations. Now, UAE is an emerging potential alternative. How is your company planning to address the anticipated increase in competition in such markets?
So definitely there will be slightly bit more competition, but under the product which we sell, which is API, we've been selling majority of the sales in UAE in the last 5 years has been by us. And in our business, the past track record creates a big differential on getting the business and not getting the business. But we keep working hard towards it. We have some value-added plants which we are putting in Middle East for getting the ICV, so that we also get that business, because now every country is protecting themselves, including Middle East and GCC. So we have a small investment of a coating plant for getting the ICV, so that we get the pipes also. So, but US doesn't affect us, because US we were not selling because of the duty in the past also. So currently also we would not be. No exposure in the US.
Okay, understood. Next that I wanted to ask was that in the recent, last conference call, management indicated that current inventory build-up, it would be shipped in next quarter. I wanted to ask that what proportion of current quarter's revenue attributed to such inventory build-up?
What we said last time is true, because inventory build-up in last quarter has been liquidated, as I told in the previous question, that we have started executing Southeast order. So if I take total turnover, around 30% is coming from that particular order in this quarter.
Okay, thank you. That's it from my side.
Okay, thank you.
Thank you. The next question comes from Yash Sinha from MIPL Family Office. I repeat, the question comes from Yash Sinha from MIPL Family Office. Please go ahead with your question. So there seems to be no response. Yeah, the next question from Jayashree from Trinetra Asset Managers. Please go ahead.
My question is answered. Thank you.
Thank you. Ladies and gentlemen, if you have a question, please press star and 1 on a telephone keypad. Repeat, ladies and gentlemen, if you have a question, please press star and 1 on a telephone keypad. The next question comes from Pratiksha Singhvi, an individual investor.
Sorry, I missed the question. Last question that I wanted to ask from my end was that company's operating profit margin, if we exclude other income, it has declined from 10% to 7% quarter on quarter. So what was the reason behind this divergence? And also you mentioned before that inventory was around 30%. So material costs would also should have been declined because of this inventory build-up. So I want you to elaborate on the same.
First of all, the other income, as I explained earlier, has been part of our business operation. It includes incentives and other export incentives plus forex. So you cannot, when you are doing the analysis, please add other income also, because this other income is not coming from the non-operating assets. All the other income is contributing from the operations only.
Correct. From the only current business only. It is not getting generated.
Please add that into your business, part of sales, and then you add. So there is a positive in the EBITDA to 10.86% at Concall level, 11.31% at the standalone level.
Okay.
Thank you.
Thank you. We have the next question from Pritesh Chadda from Lucky Investments.
Can you call out your outlook on the Saudi market in terms of, the annual market size currently there, and what do you see the annual market size heading to in the next 3-4 years?
So, if you talk about the LSAW, pretty much the market is around 2 million tons, and HSAW is around 1.5 to 2 million tons as well. That's the market trend over the last 3 years, and we expect it to continue for the next 3 to 4 years with a lot of large orders already out and under negotiations from the government.
So basically a 3.5 million ton market will stay 3.5 for the next 3 years, or what?
These around 3.5 million are year on year. The timeline to execute would be between 12 to 24 months for each order. And that's why, if you see last couple of years, there has been a large backlog, because that's the quantity and the capacity. The capacity is lesser. So a lot of the mills are full for 3 to 4 years. That's one of the main reasons why we want to go there, because there is excess business and we hope to get that.
Okay, so capacity, so this is the demand, and what is the annual supply usually that happens in Saudi?
The annual supply is, LSAW is approximately 800 to 900,000 tons on the higher side, and spiral is approximately 400, around 800,000 tons. Spiral, 700 to 800,000 tons.
So you said a 0.8 million ton in LSAW, and even in HSAW 0.8 million ton. So basically the demand is 3.5, the supply is 1.5.
Correct.
Okay, and that's where you are putting up that 300,000 capacity. And any other capacity which is coming up in the system? Because I think we heard on Welspun also wanting to expand.
Welspun is putting an LSAW mill, because they already have equity in East Pipe, who's got around 400 to 500,000 tons already. They are putting an LSAW plant, I think, of the capacity 350,000 tons. And Jindal, in partnership, is putting around 300,000 tons as well for spiral.
I missed Welspun is putting LSAW, how much? 300 tons?
350,000 approximately.
Okay, and you said Jindal is putting 300,000?
Yeah.
200,000, sorry.
300 or 300, yeah, spiral.
Spiral, and they are putting LSAW. And what are you putting?
We are putting, the phase 1 is spiral, and then
okay.
Also
okay. Thank you.
Thank you.
Thank you. The next question comes from Darshan Gangar from First Water Capital. Please go ahead.
Hi, thank you for the opportunity. Just wanted to know, out of the 1,200 crores capex earmarked, how much has been incurred till date for Saudi as well as Jammu separately?
Yeah, so Jammu around 590 crores, 350 crores has been expensed and committed, and another 240 crores would be done in the next 3 to 4 months. Saudi, approximately out of the 630 crores, 300 crores is committed and expensed, and another 330 crores over the next 6 months.
Okay, got it. And secondly, like to the previous participant, you mentioned the capacities, but broadly, say 3 years down the line with the additional capacities coming up, is there a risk of over capacity, like maybe 3 to 5 years down the line, or not as such?
With these numbers, no, but if more and more players come, there's always a risk. With the current numbers and the current people also who are putting it up, which will probably be their plants will be operational in 16 to 24 months. I'm assuming we should be okay, but obviously any other further new plants, probably this would create, but the demand is, I think currently they're growing at around 6% CAGR.
More than
would be minimum. So 6.8 is something around water, and then they have oil, gas, hydrogen, carbon capture, a lot of them. So I think for now, the next 10, 12 years, we don't find that there would be a overcapacity.
Got it. Thank you.
Thank you.
Thank you. The next question comes from Sahil Chopra from KIFS Trade Capital.
Yeah, hi. Thanks for taking my question. So, my question is related to this recognition of real estate transaction. So, how this real estate transaction will get recognized this year and in subsequent years?
It happened that the total last year, when we did the agreement, based on the agreement for the inventory in the property, that inventory has been shown as a total flooring area inventory we got into our balance sheet. And as this inventory getting sold after the launch, the revenue for the differential amount at which we have recognized the inventory minus the market price will be shown as a sale in the balance sheet. And profit will also be accrued accordingly.
So approximately 400 to 500 crores PBT revenue would be coming in, and then accordingly the profit of that would be reflected over the next.
That will come maybe after 5 years in one particular year or 1 2 years.
It will come every year. But this year will be slightly lower because it is the launch year. It will get October with all approvals. September, October it should be launched, and then year on year it will be approximately 80 to 100 crores. The total cash revenue with the company would be approximately 700 to 800 crores. And then the tax amount would be obviously lesser.
And what about that 70 crore upfront payment?
That is already received.
We have already received.
Yeah, we already
received in March itself, in last quarter.
Okay. So you are saying, and what kind of margins we can expect on this?
It's market driven, but we are expecting a good income to the company.
The site is very close to new airport. That area is coming in with a big development, and we see a good surge in the prices after the launch in September.
Understood.
The revenue which is invested, we are making much larger return on it. The revenue which was invested, which has come back to the company, is almost going to be 200 crores, and above that, everything is profit.
Okay, understood. Okay, thank you.
Thank you. We have the next question from Aditya Pandya from Vyom Partners. Please go ahead.
Hello. Hi, am I audible? Hello, am I audible?
Hi, can you speak a bit louder, sir?
Hi, am I audible now?
Yeah, go on, Aditya.
Yeah, thanks for the opportunity, and sorry I joined the call a little bit late. So I see from your current presentation, we have about 3,200 crores of order book in the pipeline. So what is the time period of this order being executed?
Between 6 to 12 months.
From quarter first. So most of 70 to 80% would be recognized this year, I believe.
Yes.
Got it. And this quarter has been a little stringent for us. So are we looking to expand it in new geographies?
Sorry, come again.
Are we looking to expand into newer geographies based on, current quarter's performance?
We are already expanding in the nearby geography. When you talk about business and going and taking business in the nearby geographies, we are pretty much there most of the places. And wherever we are not qualified, we are also working on it. So there are a lot of orders in pipeline. Like you can see, the bid book is quite high currently. So we are very optimistic, and we are very hopeful that few orders which we are L1 we should receive very soon.
Understood. Okay. And what is the EBITDA margin you are targeting on these new orders?
The EBITDA margin would be north of 10%.
Got it. I think that's it from my side. Thank you.
Thank you. We have a follow-up question from Riken Gopani from Capri Global.
Yeah. Sir, I had one question on the order book and the order inflow. You've indicated the current order book size at about 3,200 crores. What has been the order inflow growth this year? And what kind of order inflow do you expect for the full year?
So we should expect approximately around 2,500 crores of new orders by this year, so that we would have a robust order book by the end of the year, and the opening order book should be quite robust. So and as most of our orders, when we are bidding, once we get the order, we place the steel, it's between 6 to 12 months. So approximately, like we said, around 2,500 crores, and should have an order opening book of around 2,500-3,000 crores for next year, hopefully.
So just to clarify this, 2,500 crores is your expectation for the full year?
New orders. New orders.
Yeah, new order inflow for the full year.
For this year now, existing ongoing year, yes.
Yeah, so because if I were to understand, I think in the first quarter itself, you would have done about 1,400 crores plus of order inflow, right? New order inflow?
I have to exactly check. I think, yes, approximately 1,400 crores is the
We have announced this order. We have received that order.
Sorry?
So we have received this order in the Q1, 1,400 crores.
That's what I'm trying to understand. So 1,400 crores is what you have received in terms of new orders in first quarter. And for the full year, we are expecting to add another 1,000 crores of additional order inflow.
2,500
more now from here. The total will be around 3,900.
Okay. Got it. And would this number, let's say for the first quarter, 1,400 crores how has it performed, let's say, compared to the same quarter last year?
The problem in our business is a lot of times the orders from the client, though it is confirmed, it comes in various phases, because some orders we need the advance, some order we need the LC. Till the time we don't have the payment tool, we try not to announce those orders unless it's a government order. So that's why it is varied. But if you see the strike rate, pretty much we've been there around for the whole year. Between last couple of years as we are growing, we've been continuously increasing the order book. Even in fact this year, the order book is pretty much higher than last year. And going forward also next 2 quarters, I think we will probably have the highest order book of the company from the past. So I think we are doing better only.
Okay, got it. And in terms of, if you could give some color in terms of whatever new bid pipeline that you are seeing, which geographies and therefore what margins do you expect from the bid pipeline, that is, which geographies are seeing more bids opening up, and there what do you see the prospects for margins?
See, the MENA region is most bullish, a lot of orders, and then a slight bit of even Southeast Asia.
Worldwide.
But worldwide, a lot of activities, but these 2 areas would be pretty much more hot zone.
Okay, and both MENA as well as Southeast Asia would be superior margins for us in terms of overall company level margins, right?
Yes, better margin. Yes.
Okay, got it. Thank you.
Thank you. The next question comes from Harsh Vasa from SBI Securities. Please go ahead.
Yeah. Good afternoon, sir. Thank you for the opportunity. So I have just one question. Sir, regarding the Jammu plant, like, how is the GST calculation? Like, example, in the first year, we do a sales of 100 crores. So, like, 18% on 100 crores, 18 crores will be the GST, which we can get as reduction, or if you need to do minimum percentage of, like, minimum sales?
Harsh, we need to do the minimum sales. Suppose we do 100 crores worth of sales and we have 18 worth of GST. That's the credit we get. We have to pay the GST. We have to take the GST accountability from the grant. We have to pay the taxes or whatever we get, and then we have to apply after paying the GST to get the rebate from the government. That's the standard.
Okay, so example, sir, if we do 500 crores of sales, so that will be, so 18% on that will be 90 crores. So that will be the cap, right?
Correct. For us, pretty much that is round about the right number which you put in.
Okay.
On 90 to 100 crores.
Okay. Thank you.
Thank you. We have a follow-up question from Bharat Kumar from Choice Institutional Equities. Please go ahead.
Hello. Hello.
Hello. Yeah. Hanji, Bharatji.
Yes, sir. So what is the geopolitical reason you mentioned the call in the opening remarks?
भरत जी आपकी आवाज फट के आ रही है हमें बराबर सुनाई नहीं दे रही है
हेलो
yes
hello so what is the geopolitical tension like tension you mentioned the remark
Bharat we cannot hear you Bharat if you have a particular question we can't hear you can put an email and we will definitely reply back to you
sir sorry
thank you
Thank you. Ladies and gentlemen, if you have a question, please press star and 1 on a telephone keypad. I repeat, ladies and gentlemen, if you have a question, please press star and 1 on a telephone keypad. We have a question from Yash Mehta from AART Ventures.
Yeah, am I audible?
Yeah, slightly better.
So I wanted to ask that what is the geopolitical reason that led to the delay in shipments? Was it the Iran-Israel war?
It was all of them put together. It was the India-Pakistan, it was the Israel-Iran, due to which the shipping liners were affected, the ships coming which we had booked were affected. Also there was, due to the shipment issues, there was a backlog even in Kandla Mundra, and that's one of the main reasons why we could not, though the material was at port, we could not load it and send it out.
Okay. And sir, what is the outlook on the U.S. market? I think we don't have any exposure in the U.S. market. But do you think the recent tariffs will put Indian companies at a disadvantage in the U.S.?
So I think the outlook of U.S. is quite good, to be honest. For U.S. per se, looks okay. We don't have any investment yet in the U.S. or exposure. Hopefully, once we are done with our capex and the company is doing better, maybe we will review to go to U.S.
Thank you very much.
Thanks.
Thank you. That was the last question for the day. Now I hand over the floor to Dr. Ramesh Chandra Mansukani, Chairman, for the closing comments.
Yeah. So I thank you to all the investors and our directors and board to be part of the call. Thank you.
Thank you, sir. Ladies and gentlemen, this concludes the conference call for today. Thank you for your participation. You may disconnect your lines now. Thank you and have a good day.